back to, like, do I need you? Yeah, I will always need you.
You'll always need me.
Yes. Yeah.
Yeah, I think our viewers are well aware of that.
Whatever happened to the metaverse, Jim? The company's still called Meta. Or is this the metaverse? Same thing?
Yeah, we're all in the metaverse.
What is Reality Labs is still sort of when you put the Ray-Bans on?
The Ray-Bans are great.
The metaverse?
Like, you can take
Good
pictures.
question.
The Ray-Bans are great, David. You can say, what's that? You're on 14th Street, and there's like a hubbub at Whole Foods. And you say to your, this is actually true, okay? You say to your glasses, what's that hubbub on 14th Street? And it comes back and says, Whole Foods is featuring pineapples for 35 cents. That's the reality. Don't you? You've always wanted that.
Oh, yes. I love pineapple.
But it was
I'm hoping for it.
There's meant to be more of a rubric.
Yes. What's on the line tonight for Apple Amazon regarding all this
so
spend?
Apple's harder because we want to hear whether Alphabet is going to lie with them or ChatGPT, because it's obvious. Look, Siri's fabulous. I don't want to get too much into Siri because Siri will put on play the Springsteen song. I was playing some Springsteen this morning, and it'll come right up. Siri's much better than it was. I don't know if you guys have been in touch with Siri, but you can say, listen, play Born in the USA, and it's really good now. So we have to hear whether they need someone else as much as we think. And then Amazon is just, again, like Zuckerberg, Amazon's going to say, you want advertising, you want to find it right here on our site. My problem is so many people use this, and it's so easy to toggle between my Facebook and my ad, or my Insta, my ad, that here I have to go through two steps. So Amazon's going to have to prove itself whether that's a better advertising reward. It's not clear.
But we're also going to keep an eye on costs. We're going to keep an eye on, to your point, advertising, I'm sure will have once again been very strong.
Oh,
we've seen the complete dissolution of the old media in terms of their ability to...
Not the Olympics, David, not the croissants. Don't go there.
All right, sorry, you're right. Other than the Olympics, Carl, I apologize. But, I mean, the Amazon numbers are going to be extraordinary in terms of advertising. I'm not saying they're going to beat or not beat, none of those things. But just the number themselves, not to mention, of course, again, back to the whole thing, the idea of CapEx and how much is spent by these companies.
Right, we don't know.
These hyperscalers and what they're going to need to spend.
These are countries. We should stop calling them hyperscalers. And you brought it up.
I know we had that argument about power in terms of will you buy an actual electricity company. They're, regulated. It's unlikely. But you were right in the larger context. Power is as well an incredibly important component of all of this CapEx spend.
Right. Now,
securing the power, building the data center where it needs to be built, getting what you need from whatever provider you can get it from.
Well, Rusty Brazil from RBN comes out today and says it's really only the Northeast where it could happen, that they need so much natural gas that they might be able to, there could be a deal. But yes, I think you're right. I don't think the natural gas company's going to get a bid, but there's going to be a long-term contract.
But I mean, there's also talk that you go to states that have an excess amount of power for these kinds of things.
And
so
right now,
maybe,
the Northeast is almost maxed out.
Yeah, Montana.
Virginia's maxed out.
You may want to look at land in Montana, Jim. Maybe you want to open your theme park there now.
I looked at Big Sky about 10 days ago.
Did you?
Yeah,
I
found a place.
What happened with the Ireland castle? Has that happened?
That traded ahead. I bid $1 million, and they traded ahead at 1.2. $8 million reno. The Big Sky's still on the table. 1.5.
Always the reno.
We'll take a quick break. We're going to get to the chip names. We'll look at ARM and Qualcomm, Western Dig, see how they're moving the markets today. We'll get to Shack, Etsy, Carvana, and we'll talk yields as the Bank of England joins Canada and the ECB in cutting. Stay with us. Tech moves on the move today include Qualcomm, Western Dig, ARM Holdings. We are going to talk to Renee Haas next hour on Squawk on the Street. Jim, there's NVIDIA setting a record for market cap gains in a single day yesterday.
Yesterday was an odd day. It's almost like it foretold what Mark Zuckerberg said on Meta. But I have to say that when it got to 23 times earnings, next year's earnings was a wake-up call. And I think people realized, wait a second, it's not that expensive. By the way, I don't think people realize, but Meta's selling at 19 times earnings. 19 times earnings. I mean, these, David, much hype.
By the way, has been the
Colgate's
case
at 23.
For some time. Meta and Alphabet have also
but the stock's
typically traded at relatively lower multiples, even below that of the broader market.
Microsoft does have a high multiple.
And Apple has had a high
Apple's
multiple.
Really in the cauldron today because that multiple has expanded dramatically.
Yeah.
People feel that, wait a second, it's no longer just an iteration of phone, maybe service revenues.
Yep.
But, David, that's going to be the tail of the tape.
Yep.
Because it's so huge, and people just are acting like it's going to be fine no matter what.
Well, you're going to be here. We'll all be here to go through it tomorrow. Obviously, we get an employment number as well. But that move in NVIDIA was extraordinary. I mean, again, when you're talking about adding $328 billion in market value, you're basically talking about adding in one day more than the market cap of how many of the 500 S&P companies?
Okay.
Probably,
Right.
470 of them.
Let me give you another statistic. Carl lost $800 billion from peak to trough, which is bigger than all but 7 stocks in the market. So it's not like it made back all that it's lost yet. Not at all.
What do we make of the ARM and the Western Dig guidance today?
They have this Internet of Things stuff that is, we'll talk to Renee Haas, surprisingly weak. And it's quizzical. By the way, it wasn't like Qualcomm was spared either. I mean, Renee actually, it was a CFO dropped this kind of mini bomb saying, well, of course, like Internet of Things wasn't that strong. I said, whoa, I didn't know that.
Right.
It was new to me.
Qualcomm is interesting because the number itself looked strong.
Yes,
now you got to
absolutely.
keep in mind the stock. If you take a look, I think it was down 13% over just the last 3 weeks.
Yes, that trade
again, like so many of these other companies that we've been talking about in their stocks. So you see the beat, sales, but then and they say some nice things about AI in the call, including that beyond handsets and PCs, they expect on-device AI to drive competitive differentiation in industrial. To your point, networking, automotive, and the like. But then they also talked about the smartphone market as, quote, kind of flattish to a low single-digit growth. The premier tier is actually growing faster, and we've seen that. So that took some investors by surprise, and that turned the stock around. Pre-market, again, you're looking at pre-market now. We'll see what happens.
But you did get this moment in the call where they did a guide, and the guide, first quarter 25 might look similar to first quarter 24. They said, well, that means it's plus 5%, but people are looking for plus 9%. So that's what happened. It was right in the call at the guide is what caused us to go down.
And there it is, that we're talking about.
I thought it was kind of shocking, frankly. I don't get it. But Christian Amann is, at periodically times, the hype gets a little ahead of the story, is my case. That's what I thought. I'm going to ask David a really trenchant question. It's rhetorical, but let's see if he gives me a chance. David, what does this say about where Intel is, with ARM really taking share, AMD really taking share? What does it say?
Intel is just living to fight another day, don't you think? Build those plants, become the leader once again. If Taiwan is not defended under a potential Trump administration, they'll be in a very good position, won't they, Jim?
Very good answer.
Won't they?
Yes, very good answer, and it's very diplomatic, and it's better than what I would have said.
They're laying off a lot of people to sort of cut costs.
Waiting for numbers on that. The worst Dow stock of the year. Mobileye is going to open down 14.
Oh, man.
What happened?
Just on numbers,
It hurts. It got hurts. That's not, Jay.
You don't want to get hurtsed.
You don't want to get hurt. Right. Don't get hurt.
We will talk about some cars, a bunch of figures out of the European automakers, Carvana, of course, Goodyear, Toyota, Race. We'll get Kramer's Mad Dash and the opening bell in less than 10 minutes.
And Peacock.
All right, 7 minutes before we get started with trading here at the New York Stock Exchange. Mad dash time. So many earnings to cover this morning, and a lot of movers on it, including Wayfair.
Yeah, now this is a brand a lot of people know very well at home. It's one I use. It's one my daughters use. It's what you want to fill up a room with furniture. You use it, especially in office. Well, David, it looks like that what RH was saying, Gary Friedman, which was the high end, is now extended to Wayfair. Wayfair is saying customers remain cautious in their spending on the home, and our credit card data suggests that the category correction now mirrors, are you ready, Ski Daddy? The magnitude of the peak to trough decline the home furnishing space experienced during the great financial crisis.
No kidding.
I'm not kidding.
They're taking you back to 08, 09?
Yes, and that's why I thought this was really important, because if you're Jay Powell and you're watching our show right now, because that's obvious, you're listening to Wayfair and you're saying, wow, you know, maybe it's no longer RH. It's no longer RH. And I think that that's very significant, because W is pretty much inexpensive. Right. I always think high quality, but it's inexpensive. So if we don't have enough to buy this kind of furniture, and we can't buy hamburgers, wimpy, then I've got to tell you, this economy is the
sounds to me like they should have cut yesterday. Wayfair should have let them know.
I don't think that's wrong. The numbers that I'm getting from different companies are they should have cut yesterday.
Interesting.
The drop-off is really rather significant, and we haven't seen the department stores, which I'm told are going to be horrendous.
We have so many other earnings to cover this morning. We'll try and get to a lot of them. Of course, we've got an opening bell about 5 minutes from now. Don't forget, you can catch us anytime, anywhere by listening to and following the Squawk on the Street Opening Bell podcast.
If we were to see, for example, inflation moving down
quickly, or more or less in line with expectations. Growth remains, let's say, reasonably strong, and the labor market remains, consistent with its current condition, then I would think that a rate cut could be on the table at the September meeting.
That's the Fed chair from yesterday afternoon talking about both sides of the dual mandate, saying he doesn't want to see more deterioration in the labor market. Jim, claims we're the highest since August today.
Yeah, no, it's happening really quickly. And we're going to be speaking to Ernie Garcia, CEO of Carvana, and they're the second largest in the used car market. And used car prices are now almost back to 2019. They were one of the worst parts. So all that really that J-PAL has that's bad is homes. And what we found was when you take the mortgage rate up, it doesn't build more homes. So that's really the only sticky point. I think it's important to point out that food has not come down enough. That's why people are going to Costco and Walmart. And clothing has not come down enough, but that's why people are going to TJX. And that's just the way it is. The customers changed the behavior radically in the last 90 days.
Yeah,
really
big journal piece today. The era of high food inflation is over.
It's over.
And the warnings we've gotten lately, Jim, from Nestle, you mentioned Hershey earlier.
Hershey was really, really bad. That was a major miss. And David, what's happened, I think, is that a lot of companies thought they'd get away with it.
Yeah.
You know that? They thought that the consumer didn't notice.
Yeah.
That's one of the reasons why I like McDonald's. They saw it.
Hershey says consumers pulling back on discretionary spending.
Yeah.
Right at the very beginning of their press release, you can see the stock is going to be down. They also, that hedge on cocoa is not going to last that long.
Showed that the weakest part of the S&P so far is discretionary items. And it's almost double what it was before. That's who's missing their numbers. And I think that Powell should be looking at that because it's not some government figure. It's real world. It's real world.
Let's get the opening bell here at the big board. It's a moment of magic, a nonprofit focused on improving the lives of vulnerable and underserved children. At the NASDAQ, its first team, Metropolitan New York, a youth development organization. As we open up around 5540, Jim, speaking of government numbers, we will get a jobs number tomorrow.
Right.
And I know you just argued, Renaissance Macro, that maybe if these prints keep coming in like this, the Fed will be seen as behind the curve.
I think that the Fed may not recognize what Mark Zuckerberg recognized, which things are happening so quickly that you really, if you are, let's say you're at an advertising firm and you listened to last night's call and you were going to add 25 people. Instead, you're probably trying to subtract 25 people. Now, by the way, just like with the food companies, no one wants to admit anything's weak. It's really, I've got to tell you, as someone trying to figure out companies, there's almost no one who will say, listen, we see weakness in because it means you got to cut numbers. But I just keep getting the idea that they're just not going to hire a lot of people anymore. A law firm that's going to hire 50 hires 25. People are not being replaced. It is really a moment right now where the high end and the low end are under pressure. High end and low end.
What do you make of this 10-year flirting with a three-handle?
I can't believe it. I mean, the government has so much debt. Remember what we ever heard about, except for Josh Frost, who's the terrific hero of the person who makes the rates, the debt schedule. All we heard about was that this was going to be 1996, 97 debt, where they're always like refinancing, and all you did was look at the bonds. Well, you know what? If you look at the bonds, you want to buy stocks.
Yeah, that is a good question as to at what point you do actually. I mean, we really haven't seen the move out of money markets, so to speak.
No, we've
that everybody
not. And
still talks about. It may not happen.
No,
Staying above 4% is still pretty good.
In the charts that
and the
she's looking at.
2-year, it's still not bad. 4.2.
Well, that
said, it's not 5.2, which was not that long ago.
BofA's got a great chart today looking at what happens to stocks after the first cut. 3 months later, up 10 on the S&P.
Best time,
6 months later, up 12.
No, this is the best time from here till 2 weeks. We're going to have a fall rally based on what we've historically had. Except for we do have an election year, and we do not have an incumbent running. The incumbent usually has helped the situation. I mean, historically, I'm not saying. I'm not making it political.
No, you're right, and it's going to be interesting to see a rate cut in an election cycle that close to the vote.
Right.
But it does appear likely it's going to happen. Certainly the market expects it. And if we don't get it for some reason, I would assume we don't get that kind of rally that was just
Or maybe we get 50, where the odds are 12% for September.
People saying 50.
They're looking at Wayfair earnings or hearing from Hershey saying
these are
consumers pulling back.
Bedrock, okay? And you see Etsy, that's another. It just didn't deliver a good quarter.
Yeah, I wanted.
No growth.
Josh
eBay,
Silverman was a guest earlier. What happened at Etsy?
It just the growth isn't really it. Now Josh was on Josh Silverman, but they just didn't have any growth. And this again, Carl, we see no growth, decline in growth. We've had this halcyon time for so long, where when you look at the charts, almost every company that's discretionary is doing pretty well, but they raise prices too much.
It's a great point. Among the companies cutting guidance today, we mentioned Hershey, we mentioned Mobileye, Host Hotels after Marriott yesterday.
Marriott was really disappointing.
Moderna on this EU weakness.
Yeah, and don't forget anything China. I mean anything China. David, if you sell things in China, forget it. Forget it.
Just
David.
forget it.
Forget it.
Lights
David.
out, turn them out.
It's China.
Don't let the door hit you on the way out.
Oh my! No, China's really amazing because they're skipping on things that they never used to. The only thing that they're still spending on that I can tell is clean water.
Ooh,
What?
that's a nasty decline. I mean, that is always a volatile stock. Moderna. Anybody who's watched for any period of time knows that, but that's a lot.
They cut the full year guide by like $1 billion on the range.
He didn't acquit himself that morning. This morning he was on.
Excuse me?
Stefan Bancel was on
didn't
the
acquit
morning show.
What did you say?
He didn't acquit himself well.
Oh, he didn't. Well, how would he have acquitted himself given the quarter? What are you supposed to do?
Well, no, I'm saying that he didn't try to come up with some. Well, he actually did try to say some good things, but it was drowned out by the chart.
Meanwhile,
I'll give you a Kellanova. You like your Pop-Tarts, kid? You want some?
Well,
Pringles?
That was a great promotion, the Pop-Tart promotion.
Well, the stock is up 4.5%.
That guy's doing great,
Company
man.
raising its full-year guidance for organic net sales growth, adjusted basis operating profit, double-digit operating profit growth sustained. They say they're getting margins back where they'd like them. Stock performing quite well this morning.
It is very let's put it this way. This company is much better run, and I think a lot of it is Steve Cahillane, because this thing is a GLP-1 nightmare, okay? I mean, David, have you ever had those Rice Krispie bars? Are you a Pringles guy?
Once you start on Pringles, it's hard to stop.
No, that's Lay's.
once you pop, you can't stop. Is that Pringles?
Oh, I don't know. But
Pringles is great. It comes in like a sleeve.
Yeah, I know what it comes in. Yeah, I like
companies.
Pringles. I enjoy eating them occasionally, but not often.
Well, I mean,
and Pop-Tarts, you can buy them by the pack right here before you get in the subway. Take a couple of those in the train uptown.
Good to know.
Delicious.
But anyway, I think he's doing a remarkable job, particularly because we know from the GLP-1 new stuff that David said everybody takes, that you shouldn't have a craving for Kellanova.
How about this 2-year trial on Zepbound, which looked at long-term benefits for those who had obesity-related heart failure?
Well, you could argue if you're Lilly, although the stock hardly is up because it's now a no longer favored stock in this market, heart failure cuts by 38%, placebo versus placebo, hospitalization, other bad outcomes. David, what this says is like, look, let's just prescribe it because the government can't deny it anymore. Because
what it really says is being fat's not good for your health. That's my big takeaway here. Yeah.
You're a genius.
Thank you.
He's genius.
And it leads to a lot of other bad health outcomes, being fat. So when you're not fat, a lot of better things happen.
Is that why you swim a lot?
Yes.
Okay.
Yes, it is.
There's the takeaway. Ledecky. I got Ledecky over here.
Oh, did you see the 1500 yesterday?
I actually have not watched the
Dominant.
1500.
She has 20 of the top times
Of
ever
the 20
recorded.
top times.
She's a Comcast machine.
She's the greatest of all time.
Maybe the first one was
without
a
a
bronze,
doubt.
too. She teased
She's
you.
amazing. And yeah.
And nice,
I
too.
treasure
Nice person.
when I met her years ago at the U.S. Open. I took a picture with her, Katie.
It's fabulous.
She's great. Well, Jonathan Ledecky's her uncle, I think.
Yeah, I like Jeff from college.
But
Jim,
yes, and I've been in the pool a lot lately, trying to, I'm trying to hit that Olympics for the
for
Were they
2028.
The
for the
senior
certain
Olympics?
age over,
The
certain
senior
height below, the whole thing. If I can just get it right.
Speaking of diet, Jim, not hurting Shaq. Opened up 16%.
Shaq, amazing. The high-end burger did well. The numbers were very, very good. Congratulations to them. That was just a really excellent quarter and unexpected, given what we heard from McDonald's, which is obviously doing this nationwide experiment for the $5. I have to tell you that I thought that Wendy's was going to miss really bad, and they didn't. But at 5.8% yield, kind of interesting, Wendy's. They get it together, it'd be really great. What do you got? What you got
Nothing.
there? Huh? What you got for me? You got nothing?
I got a lot for you, whatever you'd like.
I don't know.
What would you like?
Well,
Chevron
okay.
Hess deal's not going to get done anytime soon. The arbitration got pushed back to May of next year.
Which one?
Chevron Hess.
Oh yeah, that thing's just what the heck? What is
Remember,
Mike? What
of
is
course,
Mike
the
thinking?
dispute
What is
that
Mike
we've been
thinking?
following for quite some time between Chevron and Exxon
How about Signal Week? Signal like Humana.
over the Guyana property and the right of first refusal. We've discussed it many times, but the arbitration that they are going to got pushed to May of 2025, and then you'll get a decision perhaps in the following 3 months. So this thing,
This is
while they say they
nightmare.
remain committed to the merger and look forward to combining the two companies, it's going to take them a long time, unless, of course, they get a bad result in arbitration, in which case then they got real trouble.
Well, I know you're very close to that. I wonder whether they knew that going into this that this could be the nightmare. I got one for David. This is a good one. David, do you know the stock How I Met Your Mother? Because it's the #1 stock that I follow.
I don't know what
How
you're
I
talking
Met Your Mother. There's this company called How Met.
How
we
Met,
call
yes.
it How Ben Stoto, who's our chief scientist for Mad Money, he was saying, listen, call this How I Met My Mother. And the stock again hits a new high. This is a fastener company for planes and forgings for planes. It's the old Alcoa. It is the How I Met Your Mother is the #1 performing stock in my lexicon.
It's up almost 100% over the last 12 months.
Well, because they've got there's 2 million screws in a 787.
It's a lot of
2
screws.
million screws. That's a lot of, whole lot of screws.
Yeah.
To our point yesterday, Jim, about industrials leading again. C.H. Robinson, Air Products, Cummins, FMC.
I have Cummins on tonight.
You do?
And I salute them. They have 70,000 natural gas trucks. They have, oh man, this is fantastic. I'm so glad we have them. They are just a technology machine. And people regard engines as like, are you give me a break? But they have engines that can run on any, Jen Rumsey has engines that can run on any fuel, whatever you need.
Yeah.
This is the new economy writ large, and that company is people think you can't make money in cyclicals, that you can only make money in tech. That's a tech machine.
Back to Howmet for a second. Was it
How I Met My
Precision
Mother?
Cast Parts? Were they in that business too? That's
Yeah,
owned by
kinda.
Berkshire,
Yeah, well, they're
right?
forgings, yes.
Yeah.
Although people said it's not doing that well, I think at this point the cycle's probably doing very well.
Okay.
By the way, if Boeing can get its act together, we're going to get like a 0.5% GDP here.
Yeah, Boeing the worst Dow stock at the moment, but big news regarding the new CEO yesterday.
Well, look, I think that Boeing has cash flow issues. That's kind of what, I mean, I'm not saying that they're in trouble. I'm saying that they would do better if they raised a lot of money. That would be like a godsend if they raised money. I just say that. They don't want to do it. I didn't say it.
Jim, a lot of geopolitics swirling around crude. Some
Yes.
discussion this morning about Brent call options, the highest yesterday in several months.
Well, I think that the people who buy oil, unless they really think that there's going to be an event, they have to recognize that we have companies in our country that are just begging for that thing to go up $2 so they can make their quarter. So I just think that people don't know. We're running below what we could at the Permian. There are people who say that's because the Permian's being tapped out. No, there are a lot of companies that are just waiting for prices to go up a little, and then it's boom. So that's what's going to
So
happen.
you do think there is a ceiling on what
Oh,
with the
absolutely.
commodity?
Yeah, unless it's a sudden shock overnight, these companies will be able to meet it. By the way, natural gas too. Natural gas is just like, okay, we got tons. We have much more than we can use. And I've got to tell you, I see this stuff and I just say to myself, why do people even fool around with these stocks? Unless there's an event. Unless there's an event, because wow, do we have a lot of oil. A lot.
Well, natural gas is, yeah.
Natural gas, we're like by far the biggest in the world.
And that may play into the larger energy question that we've been discussing for some time in terms of providing enough power for all of these data centers that are yet to be built. But
yes.
we're going to need enormous amounts of
Well,
power.
look, wind is going to be
even with a
high,
much more
son.
efficient chip from
Why
NVIDIA.
you completely bought into my rap?
No, I'm well aware of the power issues.
No, you brought into my
I just
rap that
argued
the-
with you on the day when you came in and said they were going to buy an electric company.
I think that no. I said they're going to buy a nat gas company if they were smart.
You know
and
what,
that there
you're
are
absolutely
talks.
right. You said a nat
that
gas
there
company.
apparently were
Sorry.
talks. Now you could say they were talks because Jim, you said that there were talks. I don't make stories up, and you don't make stories up.
I try not to. It's a bad thing.
The
to
other
do.
guys do, and they get away with it. What is that all about?
I don't know, Jim.
You know?
I don't know.
You know, Wayfair to merge with RH. I mean, like, hey, let's just float that and then see if it gets picked up. No, God, you gotta be
Mega cap-
careful. Someone will say I really mean that, Carl. I didn't mean
Megacap
that.
Tech is having a
doing that.
It's having a decent morning. NVIDIA shares continue that momentum created from yesterday to stock up another 1.85%.
Right.
Obviously, we talked a lot about Meta at the top of the program. Those shares have sustained an almost 9% gain. And Amazon up another 1.5% ahead of the print.
I don't know. I want people who've never listened to a conference call Reddit, they should go to Zuckerberg. Zuckerberg has gone from these very Spartan, no, flowery talk, to a fabulous conference call, a well-orchestrated conference call, the way Nike was before it fell apart.
Yes. One thing we didn't mention, Jim, CrowdStrike was such an important story for tech last month, where these comments out of SentinelOne saying that it was not an honest mistake, that it was the product of bad design. Crowd's down another % today.
I read that last night, and that was one of the most fiery attacks that I have read of one company versus another. We're speaking about Tomer Weingarten, what he said in SentinelOne, what he said about Kurtz, and what he said about CrowdStrike was just incredible. And I thought the CrowdStrike at the bottom. I didn't know that you'd have someone like Tomer just after these guys. I really doubt. I haven't seen the company called out by another company in a long time like
Well,
this.
it represents a real opportunity for them to take market share, right? So why not press your advantage?
It is. I would say that when I read it, I had to read it twice because it was just so negative. It came out. I had it on my Insta. He says SentinelOne CEO and CrowdStrike not justified, and he goes in and he just basically says that I would say that he calls it not an honest mistake.
Well, yeah.
I mean, that means but that means Delta. I'm taking the derivative here. Delta says they lost $500 million. Okay, you call Tomer on the witness stand. It's bad. I mean, Tomer might be an expert witness.
That sounds like he might be a little biased. I'm not sure I'd allow him.
Because he's the chief competitor?
I'm not sure I'd allow him for that. Yeah, Jim.
All right. Okay, I just pointed out. Yeah.
Jim, I don't know if you've seen these charts this morning of Met, Allstate, and Aflac all setting new highs for the year, all with results.
Look, a lot of people stayed away from this group, including Chubb, which is my favorite, because people said, you know what, they're not going to do as well when rates come down. Well, you know what? That was just a dumb call. These companies are really AI-oriented. They but I keep telling you this, David, you like this. Progressive is the one company, Flow, it's Flow, that uses AI instantly to adjust prices. Flow.
Yeah.
Manufacturing PMI does not go with the program.
Endless ads.
What?
From Flow.
No, Progressive is the one that changes prices instantly.
And the guy's name is? No idea.
No idea. No idea. He's featured even more now.
Yes.
I don't think Jake uses it as much as...
I'd be a little concerned. What's
you think Jake uses AI as much as Flo? Jake?
Jake from State Farm? I don't know.
I think that Flo's got the AI cornered, and Jake ought to spend some time reading Zuckerberg's conference call and get some Ray-Bans.
Jamie, that's it, right.
Another 40-point gain for the S&P. Manufacturing PMIs out a couple moments ago. Let's get to Rick Santelli. Hey, Rick.
Hi, Carl. Indeed, these are the final reads for S&P Global on the manufacturing PMI. Remember, 2 weeks ago, this number came out at 49.5, weakest of the year. Well, it moves up a tenth. Final read, 49.6. But it still remains the weakest level under 50 since the end of last year. And by the way, last year, 10 of the 12 readings were under 50. So not necessarily a very good read here. And I do want to point out the Bank of England, for the first time since 2020, cut rates to 5% and gave very little guidance. And I will give you some guidance. Don't touch that remote. Squawk on the Street will return after a short break.
see.
Carvana shares are rising on a surprise, a large profit, and a terrific guide. Carvana founder and CEO Ernie Garcia, usually on Mad Money many times, joins us first on CNBC Now. And I know that I have to join Adam Jonas in almost saying congratulations, Ernie. He had to hold back because it was such a great quarter. Thank you for coming on the show.
Thanks for having us. Really appreciate it.
All right, so let's go to this line that is so antithetical to the industry that you're in, although that it almost makes you feel like you're not in the same industry. It is very rare to be both the fastest growing and most profitable company in a category. Then I think people should understand that there's only been one way to make money in this business, where you sell so many cars and you try to do it with ribbon gross margins. You're not doing that at all, are you?
Yeah, so Jim, we started this company 11 years ago, and we decided to build something that was totally different, and that meant a completely different supply chain. It meant a ton of investment. Over the last 11 years, we've invested about $10 billion in trying to build a completely different supply chain, and all that fixed cost investment is now coming back and paying off, and it's showing up in much lower variable costs. And so it means that we can give customers a great experience, we can grow really quickly and efficiently, and then we can also hit these really exciting milestones, like having the best or the most profitable quarter of any automotive retailer ever. So we're extremely excited about all that.
Sold over 100,000 cars in Q2. That makes you right there, almost at the top, doesn't it?
We're number 2 right now, but our sights are set much, much higher. So we'll keep going.
Okay, so you have an offering that's being done, and it wasn't really clear to me. I know it's some of your stock, but I thought that what was most interesting, maybe you can give us the number, is that you list as one of the risk factors short sellers making up stuff about you. Is that still a problem?
You've been through our risk factors in more detail than I have, it sounds like. So I think, there are stories out there. There's always going to be stories. That is what it is. We don't focus too much on that. I think we always just try to keep our heads down and keep moving forward. I think, there's that old famous saying, in the short run, the stock market is a voting machine. In the long run, it's a weighing machine. So we're working on building mass, and we'll keep doing that.
Hertz has an interesting story today. They're accelerating them selling of all the inventory they have, which are, yes, Teslas in large part. Are you a buyer of used Teslas, and are they selling well?
Sure. So, let me answer that question a little more broadly. I think, we sell kind of the cars that Americans love. We look at what customers are buying. We buy those from customers and at auction, and then we recondition them. We get them ready for sale. We sell them to our customers. So that means, we're selling Equinoxes. We're selling Jeep Grand Cherokees. We're selling all the cars that you'd expect, Escapes. But it also means, we attract a customer that's a little bit younger, a little more affluent. So we do disproportionately sell EVs. We have a higher market share in EVs than we do in ICE. And so our top selling car is Tesla Model 3. So we do sell a lot of those as well. But in general, we're trying to make sure that buying a car is easy and fun for our customers, and we're giving them what they want.
There was a moment on the conference call near the end where someone said, look, you say that you love your customers. Are you going to cut them in for more of the profits now that you're making money? And I think people should listen to your answer, because actually I still think that you're true to the customer more than you are to anybody else.
Yeah, I think something that's always true of every company when you start is you have to build something that's better for customers, or you have no chance. I think it'd be really easy for companies as they age and mature to focus on margins or this financial number, that financial number. But at the end of the day, all that really matters is that your customers want your product more than anyone else or anyone else's product. And so I think we're really focused on continuing to make gains. We've made enormous gains in the last year. We improved our unit economics by about $2,000 while holding our customer offering flat. That's pretty incredible. And I think if we can continue to do that, it means that we're going to have a lot of gains to give back to customers to further separate our offering. And I think that's the dream. We want to build a great company. We want our customers to love what they get.
Ernie, looking at a chart of the stock, we all remember before the turnaround took place, shares got very, very inexpensive, a lot of doubts, a lot of headlines about near-death experiences. Was there anything about that time that fundamentally changed the way you think about running the business?
I'm gonna tell a brief story if it's okay. I think we started this company in 2013 and we launched out of Phoenix, Arizona. We were capital intensive. We had a finance arm. That didn't fit the venture capital pattern. We really struggled to raise venture capital. As a result, we went public after just 4 years. That's very early in a company's life to go public. For the first part of that, I don't think we were that well received. We were one of the worst IPOs of 2017. We came out at $15. We were down to $8 a couple weeks in. By 21, people thought we were onto something, and so that was a nice brief moment. And then, car prices went up, rates went up, We made a big bet on our future and financed it with debt. Investor perspectives changed quite a bit in 22, and our stock went down 99%. And that's not part of the dream. That's not something you foresee. That's not something you imagine. And in those moments, unfortunately, I think a reality is people will line up to kick you when you're down. And so, you wake up every morning and you read the articles and you see the news.
Who didn't line up?
People do unfortunately line up. If you want to make a friend for life, go extend your hand when someone's having a tough time, and it will really help. But I think the people inside Carvana, they responded incredibly well, and for that I will be forever grateful, because in those moments I think the biggest risk is that people decide to give up. And the people in Carvana came together. We did our best work. One of our values has always been we're in this together. But that's an easy thing to write on a wall. It's a hard thing to make true. And in moments like that, you get tested. And the people of Carvana have done an incredible job. And so to all of you, thank you so much. You did this.
Okay, so Ernie, people have to know, I bought a car. I bought a car from you guys for somebody, and they didn't like the car, and I returned it. The stock was at $3. I said, this is a win. Gotta love the stock. But you also had help, didn't you? You had some people from a big private equity company came in to help you.
So I think early on, we had some great investors. Along the way, we had a lot of investors that stuck with us and believed in us. We've certainly had interactions with different debt holders and everything that have been very supportive. So I think these things never happen alone. That's just not how it works. I think building anything is always a battle. It's always harder than you imagine up front. And I think you got to get a little lucky along the way, or it's just not going to happen. But we've been lucky to catch a couple breaks, and I think we've been very lucky to accumulate a team that's been very resilient and been able to fight. And so I'm just extremely proud and extremely grateful, and I think we have a lot left to do.
All right, keep that humility, Ernie, because I know when you were down, you came on air, and you didn't duck us. You came right on air, and you did the right thing. I want to thank. I've got to tell you, you saw. I don't know if you guys ever bought one of these cars? Ernie Garcia is the CEO of Carvana, and I'm just laughing because the person I bought the car for said, I don't really like that. In the old days, you had to eat it. So I said, hey, come pick up this car. I don't want this car. And they came up, and I didn't know any money. It's pretty amazing.
All right, thanks to Ernie.
Cool thing.
Jim, you're going to stick around for Renee Haas.
Hey, I got time on my hands.
Of ARM, 10-year 4.008. Don't go anywhere.
And Peacock.
Back to Squawk on the Street. Rick Santelli here with the last breaking news of the morning. Construction spending for the month of June expected to be up a couple of tenths. Not meant to be, down 0.3%, which means we now have back-to-back negative numbers, and minus 0.1 last month gets dramatically changed to minus 0.4%. So minus 3 and minus 0.4%. These are back-to-back negatives. That hasn't occurred since the fourth quarter of 22. If we look at ISM manufacturing for the month of July, headline number expected to be below 50 is below 50. 46.8, that is the weakest level month over month. Well, since July of last year, so we'll basically call it 1 year. 1 year now on prices paid. We're expecting a number in the vicinity of 51.8. 52.9, and that's sequentially higher than 52.1. 52.9 is the biggest prices paid, and of course it's going in the wrong direction just since May of this year when it was 57. So even though it's a bit higher, we have made progress. Last month's 52.1 was the second lowest reading of the year. The lowest reading of the year, of course, was 52.5, and that was earlier. Both of those, of course, were very tight. If we look at the new orders component, it is 47.4. If you look at that number, it's the lightest since May of last year. And finally, employment on a very important week where we had a light employment level on Wednesday from ADP. And, of course, we have the big jobs report for July tomorrow. 43.4, 43.4. That's the weakest level going all the way back to June of 2020. We'll call it 4 years. Carl, back to you as we flirt with 4% and under.
Yeah, first time in about 6 months. Thanks, Rick. Rick Santelli. Good Thursday morning, everybody. Welcome to another hour of Squawk on the Street. I'm Carl Quintanilla with David Faber, Leslie Picker. Kramer stuck around here at Post 9 of the New York Stock Exchange for this interview this hour with ARM CEO Rene Haas. Break down those results in just a moment. As Rick mentioned, though, we have lost some opening gains. Dow mildly negative, and the 10-year does cross below 4 for the first time since early February.
And happy August, everybody. We're about 30 minutes into the trading session. Here are some big movers we're watching today. Meta and ARM both beating estimates, but really mirror images here, moving in opposite directions on guidance. You can see Meta's up about 10%, ARM down nearly 12%. We'll dig into both reports in just a moment. C.H. Robinson shares, they are popping. The company reporting better than expected profits, helped by cost-cutting measures. Those shares up nearly 18%. And Moderna plummeting double digits after slashing its full-year guidance in the wake of weak sales overseas and a, quote, competitive U.S. market for respiratory vaccines. Those shares down 15%.
Meantime, it is the beginning of a new month, Jim, and we know about historical seasonal weakness going into August, September, October.
Yes, although I do know that there is supposed to be a wave, and this is, I know, from Larry Williams, who's the greatest market historian, technician I know, that begins August 5th. In other words, be bottoming right here and then come out. It's actually a big wave, and a lot of it will key on what Apple says to them. Because they don't know whether it's going to drop first and then start going up.
We'll see about tonight.
Yeah, look, this is a very big day, and there's only 4 of them, and they're really important. And one of them that I think we have to focus on is ARM. ARM shares are falling after guidance that was a little bit light, but that said, total revenue was up 39% year over year. CEO Rene Haas joins us now to break down the numbers. Rene, it's always a pleasure to see you, but I also want people to understand you were cautious on some part, but let's go over what's great first, and that is what you're doing with the tech titans and how you are now the most ubiquitous processor in history. I want you to have the floor on that before we go into the difficult guidance.
Well, thank you, Jim. It's great to be here. Thanks again for having me. You stated it very well. ARM is the most ubiquitous microprocessor compute platform in history. We are in every digital device you can get your hands on. Again, we estimate 70% of the world's population touches ARM in some way. That's in the data center, that's in the cars, that's in PCs, that's in mobile phones. Literally every digital device runs on ARM in some way. And the reason that's so important in terms of thinking about our company going forward is that the platform, in terms of going forward relative to growth, et cetera, you can't build a digital device without ARM. So whether you're thinking about growth in the data center with AI or even security cameras, it's going to run on ARM. So we're very, very bullish about our long-term prospects.
Now, I think people should understand that one of the reasons why that is the case, a lot of people don't understand what makes a winner here. So many people write software for you, and that's what makes you dominant, correct?
It is the software. Thank you for the great setup. There's been a lot of compute platforms and microprocessors over the decades. But what really makes a compute platform sticky is the software. And what does that mean exactly? Well, the operating system and all the applications that run need to run on a microprocessor. So when you think about your iPhone, your Android phone, iOS, Android, when you think about your PC, Mac OS, Windows, when you think about your automobile that runs software, all of that runs on ARM, but most importantly, you have decades that have been spent not only writing that software, optimizing it, tweaking it for performance, and as a result, to switch that out is just a gigantic piece of work that, frankly, people don't have the time to invest in because people are investing in adding more and more new capabilities to these machines, such as AI. So yes, it's really all about the software, and it's the software that really, really makes us so sticky.
Excellent. So, Renee, before I get to the negative stuff, I want people to understand you got a double in this thing already. It went up a lot, but you did say this. Well, Jason did. Jason Child, your excellent CFO, points out that there's continued weakness in Internet of Things and networking equipment. Now, that strikes me as someone who's trying to figure out what the economy's doing as maybe some sort of economic weakness, because these are, in general, cyclical businesses, and it looks like they're not troughing yet.
Yeah, I think the important thing when you look at ARM, Jim, is you have to understand our business and how you break it down. We have two components to our business. We have a licensing business, which is really about R&D, and that is investment in new technology, new products. Our licensing was up 72% year on year, and we're seeing huge growth in demand because, candidly, to design these advanced products, people need more and more compute capabilities. You know, for example, the chips today that are running some of these AI workloads like Llama, when those chips were designed, Llama was not even invented. So what we're seeing is people needing to invest more and more in new chips. So that drives licensing, which is about 40% of our revenue. We saw great growth. The other component is royalties, and it's well documented that some markets are slowing, have not completely recovered, but we're seeing great growth in some other markets. Our cloud business was up 75%, double digits up in automotive. And one of the areas we're most proud about is our smartphone growth, where units have been relatively flattish, but we were up 50% year on year on royalties in smartphones, and that's because our new version 9 commands greater royalties. So for us, you really need to look in the long game in terms of the mix, but licensing is really the canary in the coal mine, if you will, about investment in new R&D. If that's going up, that's great for ARM. And royalties, because we're everywhere, not every market is up and to the right. So yes, true, there are a few markets that have not completely recovered.
And can you give us some more color on your licensing pipeline, especially as you say you're bullish about the long-term prospects? How long does that take to really filter into royalties?
Yeah, it's a great question. Thank you for asking that. It generally takes about a couple years from the time we license technology to the time it shows up in royalties. And that's really a function of the time the IP is licensed by the customer, they put it in a chip, that chip goes into an end product, let's say a smartphone, and then goes into production. It's about 2 years for smartphones, probably the same for PCs, a bit longer for data center and automotive. But it's a great leading indicator of where our business is going. So if you see licensing consistently up, and licensing has been, frankly, fantastic for the 4 quarters since we've been public, that's a great leading indicator of more ARM in the future.
You know, Renee, we talked about earlier, the previous hour, that the worst performing stock in the Dow is Intel. Now, I would have expected that Intel would have gotten a lot of the CPU business in the data center, but it seems like that this may be almost a game set match, zero sum, where you took it all.
Well, the data center market, Jim, is a really interesting market because you have the traditional data center market, general purpose compute, if you will. And ARM had a lot of momentum in that market in the last couple of years. We picked up Amazon, we picked up Microsoft, Google announced the chip. So we've seen great growth in general purpose compute. And that's really because of the power efficiency of ARM versus x86 and other architectures. But I think the real growth driver for us is also going to be in these AI data centers. And these AI data centers, as you well know, are very, very complex. They're extremely power hungry. much more so than a traditional data center. They also greatly benefit from customization. That is, building a custom system, a custom blade, a custom rack, a custom chip really gives strong benefit in terms of price and performance. That's why you see something like Grace Hopper and Grace Blackwell. That type of solution could not be built any other way other than with ARM. And I think that is going to be a tailwind for us in terms of AI data center growth, because the customization and power efficiency lends itself very well to AI data centers.
Well, hey, Renee, you know, on that subject, there are a number of investors, at least, who start to question how long the growth can continue in terms of the enormous spend that we sit here talking about, numbers we've never seen the likes of. I know you've had a long career. You've never seen anything like it. Is there a point at which you think it starts to hit the wall? I don't know if it's 2026 or when it may be. Or does this spend just continue unabated for a long period of time?
Yeah, I don't like to admit how long I've been at this, David, but you're right. I have seen a lot of these different trends over time. I think one of the things you have to look at with AI is what is driving the spend and why would it continue. One of the things that we have found with these large language models, generative AI, is they require a tremendous amount of compute to get smarter. And the smarter they get, the more you need to tune the models, the more compute you need to make it smarter and smarter. And I would argue that in terms of the capability of AI, whether it's AGI or ASI, whatever acronym you want to use, we're not there yet. We're actually not quite close to it. So I do think there will be more and more investment, and I think you saw it in some of the companies that have announced they're putting more and more CapEx into this. I think the thing that gets disaggregated a little bit is the business models that support all that CapEx. And honestly, I think that's not the right way to look about it, because, you know, it's like maybe going back to the internet of 2001 and looking at the business models back in that time and saying, well, gosh, you can't make money with web vans, so there isn't really going to be an internet going forward. That's just silly. The business models are divorced from the capability. And I think AI is going to be the most transformative type of technology we've seen in our lifetimes, just relative to the benefits you get, whether it's self-driving, whether it's drug research, areas around education. We're still in very early days, in my opinion.
Yeah, and I can remember talking to your control shareholder, of course, SoftBank, run by Masa, some time back, about the benefits that would accrue to society from AI. This is years ago. How much is he involved in terms of you and pushing you, you know, in other perhaps areas that he sees as growth opportunities?
Yeah, Masa loves AI, as you know. Masa also loves ARM. So we talk quite frequently about the long-term strategies for the company and opportunity. He's very excited about the long-term prospects for the company, as am I. So we're quite aligned, I would say, in terms of the vision for the company.
You know, Renee, there's a chart in your deck that's really incredible, which is AI on ARM, energy efficiency from the data center to the edge. Call your attention to cloud compute, NVIDIA. Is it not true that one of the reasons why you have such a close relationship with Jensen Huang, other than the fact that you did work there, is that he cares more about heat than almost anyone in the business, and you deliver the most energy efficient piece of hardware and software?
Yes, exactly. And I think it's not just the chip, Jim. Obviously, Grace Blackwell, the ability to combine ARM CPUs with the NVIDIA GPU for a world-class solution delivers a tremendous benefit from a chip. But that allows a complete customization, as I said, of a total system. NVIDIA is delivering not just Grace Blackwell, but they're delivering an entire solution, an entire system. And you can't do that starting with just a random set of components. It requires a much tighter integration of the design. And again, ARM is really strong with customization because you can build almost anything you like. And then the fact that we're far more power efficient than the competition, it's somewhat natural that we're going to find our way into all those solutions.
Well, thank you, Renee. That's terrific. And I think that people should understand that you are a very level-headed guy. You root for the wrong NFL team, but that's okay. That can happen to anyone. Renee Haas, the CEO of ARM Holdings. I'm not going to reveal his team because it's so horrible that I would be making fun of him.
Our thanks to Renee. Jim, markets turned a bit, but Cummins still up 5%.
Yes, and I'm so glad that we have Cummins on, because I think that what people have to understand is that technology is in companies like Cummins. That's who's the future. We have to have truck engines be clean, and they have to be efficient. And what she's done and what the company's done is remarkable. That's who we should be seeing the praises of, not just companies that make it so we can go 1 hour save in a documentary that we're doing out of 5 hours. Okay, that's what's really happening.
Important night tonight, Jim. We'll see.
Yeah, well, this is Amazon and Apple, and it's this big. David, I think, is going to play in this tomorrow.
Nice.
I'm going to play?
Yeah,
I'll be here.
Yeah.
Yes, you will too.
Yes, I will. Thank you for pointing that out.
You're welcome.
Thank you, Jim. As we head to break, here's our roadmap for the rest of the hour. Meta shares surging on its latest results as their AI strategy pays off. We'll talk to one analyst who just raised his price target.
Plus, the saga continues. Bill Ackman's Pershing Square is now withdrawing its plans for an IPO, of course, of what would have been a closed-end fund. Leslie and I will talk those details.
And later, Squawk on the Street heads to Paris. We'll get the latest from the ground at the Olympics as Squawk on the Street continues after this break. Welcome back to Squawk on the Street. Fed Chair Powell saying a rate cut could come as soon as September if the U.S. economy follows its current path after the central bank ended its latest policy meeting, keeping rates unchanged. Joining us here at Post 9 this morning to talk about the road ahead, former Dallas Fed President Rob Kaplan, now Vice Chairman at Goldman Sachs, just down the street. Nice to have you on set.
Good to be here.
Impressions from yesterday?
I think Jay Powell did exactly what he needed to do. He didn't commit to a September hike, but he set the stage for a September hike. He reminded people that the risks are now more, in his words, two-sided, more balanced, labor markets normalizing. And I think he's set up so they have the opportunity to cut in September, but only if the data continues to confirm improvement in inflation.
Meantime, today, claims highest in almost a year.
Right.
This manufacturing PMI number not strong. If NFP's weak tomorrow, will we hear more that they are late? And although that some argue that could be quickly remedied.
So my own view, and I'd say probably the view of our economists at Goldman Sachs, are the economy is weakening. Maybe the labor force is normalizing, but the economy is not falling out of bed. Now, if that turns out to be wrong, you'll see the Fed move more aggressively. But I think they're in the neighborhood of where they should be.
Does the economy need to fall out of bed to get a cut?
No.
You think it's better to be proactive?
No, I think as long as you continue to see continued moderation in inflation, particularly in the service sector. The inflation issue today is not in goods. Manufacturing being weak is confirming that goods are disinflating. The service sector is where the inflation issue is. As long as we see continued moderation, I think you'll get a cut in September. The only caution I'd give, people should not overread what the Fed will do after September. I'm not sure this is going to be a typical cycle.
What about financial conditions? I ask because I just got a quote from Moody's, which said, despite calls for September rate cuts, financial conditions are not especially tight. Banks must proactively address ongoing credit and margin challenges, even if rate cuts ease some pressures. In other words, don't count on these rate cuts to come and solve any issues with rising delinquencies or other credit quality issues.
So the issue on the positive side, credit spreads are pretty tight. They're kind of mid-cycle tight, early mid-cycle tight. To the extent banks are having credit issues, it has to do with commercial real estate and the fact that rates have been this high for this long. So one of the things a little bit of moderation on the Fed funds rate will do, it'll take a little bit of pressure off the banks. It'll make it a little easier for small business to borrow. It probably won't do much for the real estate industry yet. And the fact of the matter is, credit conditions and financial conditions are pretty robust right now.
You just said a moment ago it's not potentially going to be a typical cycle. Why not?
I think the issue is, as long as we continue to stay around full employment, and unemployment's ticked up, but mainly because of supply increases, not because of lack of demand. I think there's still good labor demand. We still have an inflation issue. And this is maybe a little bit of the disconnect between Wall Street and Main Street. Wall Street sees that we're moderately heading down in the twos. Main Street sees inflation has averaged over the last 4 years about 4.5% plus, and they're struggling to make ends meet. And so if I'm at the Fed, I want to make sure we wrestle this inflation bear to the ground. And so I'm willing to do a cut, but I want to be very deliberate, and I'm also very mindful of the fact you could have a new administration, you may have new policies. We need to assess those policies, and I think slower and more spacing would be better because there's still a lot of uncertainty.
Any concern, though, about the overall economy? I mean, this morning, Hershey says discretionary spending on chocolate. Wayfair starts to see real weakness in their customer base.
Concern, yes, and is the economy weakening? Yes. However, I think the big area of weakness is the low to moderate income families that make $50,000 a year or less. That's 60 million plus workers. They are struggling to make ends meet. When they go to McDonald's, they're going to buy the value meal, not other things. You're seeing this in other spending. There's another big group of consumers that are over 55, have a fixed rate mortgage, have financial assets, have actually seen their financial assets go up. You're seeing income and wealth inequality growing. And I think you're hearing from some of these companies, if you deal significantly with low, moderate income consumers, they're under pressure.
We'll see what the jobs number brings tomorrow. Rob, really appreciate you coming in. Important week, as we can all tell. Thanks.
Good to
Rob
be with
Kaplan.
you.
After the break, Squawk on the Street heads to Paris for the latest on the ground at the Olympics, plus Martha Stewart's big tech picks. We're back in a moment.
Welcome back to Squawk on the Street. Our Andrew Ross Sorkin is live at the Paris Olympics. He joins us now with more, including Martha Stewart's thoughts on Meta and a lot of other highlights. Andrew.
Thanks, David. We are here in Paris. It is now day 6 of the Olympic Games, and Team USA's Katie Ledecky winning gold in the 1,500-meter freestyle. She's now tied for the most overall medals and most gold medals of any U.S. woman in Olympic history. It was a sight to behold last evening. I was there in person, and the place was electric. Meantime, USA men's basketball advancing to the quarterfinals. This after defeating South Sudan, and they did it a lot better than they had done it, if you remember that exhibition game where South Sudan came within 1 point of winning. This time it was 103, though, to 86. So maybe they learned their lesson during that exhibition game. And as you mentioned, David, you know, earlier this morning we talked to Martha Stewart. Now, she joined us on Squawk Box here in Paris, and the truth is that we were just wrapping up the interview. We talked about so many other issues, including what she's doing with Snoop Dogg here in Paris and her Snoop Dogg sneakers that she was wearing. They're gold. When she noticed that one of our meta charts was displayed on the screen here, and then she said this about Meta and then Tesla. Take a look. Saturday on Peacock. That's going to be a lot of fun.
Meta, rising, rising, rising. How fabulous.
There it is.
Yep.
You own the stock?
Yep.
Full disclosure there.
Nice.
Hey, Melissa, back to you.
I want to know what else is in the Martha Stewart portfolio. What else is she
actually a good
trading?
question. Hold on, what is? What else?
I have been an investor in Google, Apple, the big tech stocks. Tesla, I loved Tesla. I'm pissed at Elon Musk.
You're pissed at Elon Musk.
I am, and he better get back to work in certain areas.
Oh, so what? Hold on. What's your problem?
I love electric cars. I drive. I have 2 electric cars. I'm now getting the Rivian truck.
Yeah.
And I think that if we don't get going on this stuff,
right,
you know, and concentrate.
Is the Rivian, though, a protest against Tesla? Because you were just making...
No, I love the colors. I love the shape. I love the whole thing. I tried the Cybertruck, and it's just too crazy for me still.
She also sang the praises of TikTok and said flat out it's not going to get shut down. So there's a call there, and we will see what ultimately happens. As I mentioned, Martha is commentating with her pal Snoop Dogg this weekend right here on NBC and Peacock. And here's what else you need to know about what's on tap here at the Olympic Games. The women's gymnastics individual all-around women is coming up today, a little bit later. Then we got women's team foil finals. USA is going to be taking Italy in the gold medal match. It's going to happen this afternoon, 2:30 p.m. Eastern Time. And Team USA women's basketball taking on Belgium. We also have some golf for those folks who are watching Scotty Scheffler. And I just saw that Rory McIlroy is sitting now at number 3. So a whole bunch of things going on. And I know you're there, David, but Carl's coming this way. We got to talk about what to wear here, Carl, because it's very hot. I don't know if you have a linen. You need some linen.
Yes, well aware of the weather, although you look really good in that suit. I do have to ask you, we mentioned earlier your conversation with Costas and Al Michaels, and what an amazing story that continues to be as we just talk about various use cases for AI.
It was an unbelievable discussion. As you may know, Al Michaels has now given over his voice to a report, a daily report. You can go listen to it right now, where he reads you everything that happened at the Olympics. But he's not really reading it. It's his AI voice. It's been trained on literally years and years of videotape and really his audio. And it sounds as if he's telling you exactly what happened, doing a recap of the Olympics. And the funny part, of course, was he said that he was given a call and asked, do you want to do nothing for some money? And he said, you know, of course. And here he is. But he did admit that it's a little scary. His wife was with us, and she was saying it. I mean, it sounds exactly like even the intonation, the phrases, everything. And so, Carl, I think, you know, I don't know if you're going to give over your voice. David may give over his voice. Leslie, we're all going to be avatars. We're going to be avatars.
This is what I'm hoping for. This is going to sustain me in my retirement, which is going to begin very soon, Andrew. So, yes, thank you. I'm going to check in with Al all about this.
Andrew, just stellar coverage all week long. Some blockbuster shows this week. Andrew Ross Sorkin.
Thank you. Linen. Get yourself some linen, Carl, for next week.
Still to come this morning, the big tech breakdown as Meta surges on these strong results, and we look ahead to Apple and Amazon tonight. Back in 3.
Now.
We are following the prisoner swap underway between the United States and Russia. Our Eamon Javers this morning has the latest. Hi, Eamon.
Hi there, Carl. We cannot yet report names of who might be involved in this prisoner swap, but what we do know is that a massive exchange is going on between the United States and Russia, and there are a lot of moving pieces at this hour. We know, of course, that there have been negotiations going on for quite some time about Evan Gershkovich, the Wall Street Journal reporter who's been held and is probably the most high-profile American held in Russia today. As I say, we can't, though, say who exactly is on planes, where planes are, or any of that until we get official confirmation. But this is potentially a very large prisoner swap, and U.S. officials are saying that this is now underway, according to NBC News. Carl.
Thank you, Eamon. A historic day indeed. Appreciate you bringing us the latest. Let's get to the latest out of big tech as well. Meta shares soaring on strong results driven by the company's AI strategy as the street gets ready for new numbers out of Amazon and Apple in just a few hours. Our next guest just raises price targets on both Meta and Amazon and calls them both a buy. Truist Yusuf Squali joins us now to break things down. Yusuf, thanks for being here. Could you just give us the cliff notes on why you decided to raise the price target on these two names?
Sure. Thanks, Leslie, for having me again. So on Meta, it's pretty straightforward. Last night's print was really impressive. Not only did they grow users, they grew monetization, they outperformed on the top line, on the bottom line, and at a time when the valuation remains pretty attractive. It's basically trading in line with the S&P 500, knowing that it's growing much faster the top line and even better on the bottom line. So that's for Meta. We think there's some questions about AI, et cetera, we can talk about, but that's for Meta. For Amazon, we haven't seen the numbers yet, but clearly we think they're going to outperform on the marketplace. We think they're actually, even though they control e-commerce in the U.S. at 46, 47% market share, we think they're going to eke out even further growth. We think they're going to put up a 10, 11, 12% top line growth at a time when their margin profile should improve. Their ads business, they're growing twice the rate of the industry. And AWS, which is everybody focus, we think is going to show slightly incremental acceleration to that 17, 18% year-on-year growth. Again, all packaged in a still pretty attractive valuation.
On the Meta call, you asked about the broader applications of Llama 3, and Zuckerberg answered it's basically a bit of a long roadmap, but they want to add different applications, including commerce. How are you handicapping the future of this?
So unfortunately, we have more questions, honestly, on that topic than answers. But that said, I think to a large degree, Zuckerberg has really earned the right to get the benefit of the doubt. He was the architect of moving the company into mobile, into short-form video, and now into AI. They are spending a lot on AI, and I think we're already starting to see green shoots from that spend, partly in their core their core advertising business, and increasingly on this Gen AI. So the question I asked was exactly about that. What type of consumer applications they can go ultimately into? I believe one of the key applications they could go is search. Obviously, it's a $300 billion market today, controlled fully effectively by Google. But just like what we saw a couple of weeks ago with OpenAI alpha testing a search GPT, we think ultimately Meta will have a search product that could help you look for commercial or do commercial queries on Meta AI, and that's pretty huge.
Yusuf, on all of these mega cap tech names, it does seem like they're either entering an investment cycle where costs are going to go up and they're warning about investments and equity investors freak out a little bit, or they're going through periods of retrenchment and restructuring and they're lowering costs. Which is it, would you say, at the moment for Meta?
I think for actually both Meta and Amazon, we're going the other way. We're going into an investment cycle, particularly around AI. So for Meta, for instance, one thing we did yesterday is we bumped our CapEx up by about $5 billion on the back of Zuckerberg's commentary. I suspect
それではこの後皆様お待ちかねのコーナーでお会いしましょう。大スプグです。そして13年目もよろしくお願いします。安西先生は大丈夫ですよ。安西先生、この前さ、あんまりあの人さ、X 書き込まないんだけどさ、このゲームのディレクターね、安西先生って。なんか急にさ、ラーメン食べに行こうとか言い出したんだ。1週間ぐらい前。あれ、匂わせ俺の
バージョン仙台始まります。
俺のグルメ巡りのラーメンの匂わせあれは。
写真撮らんのか。
写真いや、撮らない。今撮ろうとしたけど、もう、
ておかれたというわけです。あ、なるほどね。ほこりがこんなに溜まっちゃうほどね、ここにかなり捨て置かれていたと。そういう館だね。じゃあマスクつけてきて正解だね。ほこりがあるわけだし。これはね、私のロールプレイ的にもいい。このほこりの影響を受けないわよと。ね、ちょっとむせたりしないってことで。なんか上に乗れそうなんだけど。ぴょん、いけ。なんだと。くっ。主様。ちょっと待って。なんかね、乗れないんだけど、ここ。ダッシュが足りてない可能性が高い。ちょっと待ってください。ちょっと待ってください。もう進めないんだけど、もうこっから。進めませんぞ、これ。もしくは違うのかな？こっから行くしかないよね。こっから行くしかない。ちょっと失礼。ここから走ってみます。おい。なんだと。ギリギリ届いてない。ちょっと待って。もうギリギリ届いてない。際か。もうちょい際でジャンプしないといけないわ。今日はもうね、
ごめん。俺が弱いばっかりに。間をつくな。撤退するぞ。
Kurde, ja widziałem, że umieram, ale mogę uciekać. To gdzie mam teraz biec? Dobra. A nie przeskoczę. Dobra, otwieram to wszystko. Zmiksujemy zaraz jakiś koktajl Mołotowa. Nie Mołotowa, tego. To jest gorąco, to jakiś koktajl zmontujemy z potworka. Bam. Lecimy dalej do przodu. Lecimy. Będzie przez chwilę. Fajnie. No, co mam nacisnąć? Dawaj. Aha. Kurwa, nie zdążyłem. Olalala. Czy to jest skrynę do napoju? Pięknie, lecimy. Elegancko. Lecimy dalej. Nie przejmujemy się tym. Bam.
Let's hurry. We don't want to miss Simmons.
Nie mamy, kurde, nic do picia, do sklepu będzie trzeba iść. Ale jestem podniety. Z tego gorąco już taki zmęczony jestem. Proszę czekać, na co? Ogłuszanie wrogów. Atak w głowę. Epics. Dołącza do gry. O, jakiś ziomuś dołączył do gry.